Are you looking to start a limited company in 2021? Well, this video is for you. As business accountants, my team and I spend all day long helping business owners on their journey. And of course, one massive part of that is helping people on that first little start of the journey of forming a limited company. Now, this was a popular video in 2020, so I wanted to do a 2021 edition, mainly because there are small tweaks. A lot of that core video is the same, but I wanted to talk to you a little bit about how, coronavirus has affected some of the practicalities of this and some other things that you should know as we go through it. So I'm going to talk to you about sort of 4 key decisions you've got to make when you come to form the limited company, a little bit on the practicalities then of how you can get it formed, and at the end I want to touch on things like bank accounts for the company, getting paid, these kind of things, because I think they're important practical points to consider right now as we're into 2021. Now, before we get into this, there's a couple of things I want to talk about. The first one is to make sure that you should be a limited company. There's other videos on the channel and there is one titled, Should I Be a Limited Company? Please do go and watch that. In fact, if you've not researched that, go and watch it now, bookmark this, come back later, watch that video first, because I think that is absolutely key to understand. The other thing I want to do just before we get into it is, if you like these type of videos, make sure to click the subscribe button below so you get notified whenever we release more videos just like it. So just before we get into the video in full and talk about the decisions, I just want to recap briefly what is a limited company. And realistically, it's just a piece of paper at company's house that says this legal thing exists. It exists in its own right, it can own stuff, it can buy things in its name, and as a result, it's what they call a separate legal entity. It exists, and that means from an owner point of view, it's good because let's say something goes bad in the business, then generally and you got sued, your insurance didn't pay out, then the company's assets are the only thing that's at risk. So the money in its bank account, its vans, its computers, those things, not your house and the like, because it's its own thing. So for that reason alone, a lot of people like the protection that that particular thing offers. But realistically, it is just a bit of paper that legally creates this thing outside of you as an individual. So just bear that in mind. And I think it's a good concept to remember throughout your entire life of the company, because it's very important when it comes to drawing money out. When you want to actually pay yourself, if you think about it, all the money in that bank account is the company's money until such time as a bit of paper says, actually, no, it's yours as the owner or as the director. And if you bear that in mind throughout your whole limited company journey, I think you can have a good time. So just a small thing there on what a limited company actually is. So having watched that video, let's get into it. So the first decision is decision 0, really, which is, should I be one? We've already spoke about it. You need to go and watch that video. But having done that, I'm going to presume that you've satisfied yourself that actually this is the way forward for you. And the main thing is, I spend probably, as a team of people, we spend half our life asking that question just to make sure. Because if you're testing the waters, I just want to lay it out there, do make sure that you've thought about going as a sole trader before doing this. There are some cost and other implications to doing this that you might not be completely comfy with, so go and do check those things out first. So let's presume you've done that, you've made the decision that limited is right for me. So then let's talk about the first thing, and probably the most important decision, and it's a little bit tongue-in-cheek really, it being the most important thing, but it's the thing that stumps people the most. We talk to potential clients about why it's good for them, why it's not good for them, we make the decision together, and then I say, and what do you want to call it? And they go, oh, do you know what? I haven't really considered that, and we'd spend a bit of time joking around different names. So let's talk on that. You can call it, to a degree, whatever you like. And when I say to a degree, some words are restricted. So with a company, there's a register at Company's House. So you can actually go find this. If you Google Company's House Beta, B-E-T-A, you'll see you can just type in a search bar and it brings up all the different company names. So what you should do is, when you've decided what you'd like to call it, go on there, check that the name's not already taken. If there's a very close name, you might also think about changing it, because it is possible that you might be able to form it and then you'll be asked to change it later. That could be annoying, so do make sure that it's not there. So if you were thinking of just going, I'm just going to stick and co on the end, or and associates, something like that, quite often you're going to have problems with that. Use oddly can get away sometimes with things like brackets UK, brackets Southern, but you're always running the risk that the other company can come back to you and say, actually, we've got a, say, protected trademark or something, and we want you to change your name. I've certainly seen that with clients over the years. So if you can, get something completely different. And oddly, sometimes you think, oh, that name must be taken, and it really isn't. So do go and do check that. But yeah, consider that. One big thing that's important to remember is, while you have got this register, you don't have to trade under that name. So you might have a fancy logo and a fancy trading name that's got nothing to do with the name of your limited company, but on all of your documents that you send out, like your invoices and things, on small print somewhere, it's going to have, registered company, here's my number, here's my registered name. But you can have a trading name that's different. So if you were calling yourself, I don't know, SJJG Plastering, I've just picked that up, so hopefully that's not an actual company. But you were trading as Super Wizzy Plasterers, then fine, there's not a problem. But generally when people are going to pay into your bank account, especially these days in 2021, they would have to put those details into their online banking as the legal company name a lot of the time to get that to match. So I think it's good that the two do match to a degree, but at the same point, it isn't critical. Think of Mars bars, for example. I'm pretty sure, I haven't actually Googled it, but I'm pretty sure there probably isn't a Mars bar limited, but Mars is a trading name, it's a brand of theirs. So, think of those kind of things. So, but deciding what to call it is very important. You can change it at a later date, but it will always show the history of the name changes. So if you called it something really silly and then wanted to change it to something a bit more professional, technically it's still there. But we do have plenty of clients that name their companies after their dogs. We've got ones that are named after biscuits, all this kind of stuff. But yeah, so do pick your name. So decision 2, your registered office address. So when you form it, you're going to be asked for a registered office address. Now this is an address that's going to go on the public record at company's house. So whatever you put in there, it's going to be visible to anybody doing what I was talking about at the earlier steps of just Googling company names. So that's important. So quite often you might have an address that isn't your home address as a registered office address, so there's a bit of protection there. And the way you do that is you'll find accountants will sell them, many of them. You can also just Google it. There's loads of people that do registered office addresses. I think some people in the UK love the swanky idea of having a London address if they haven't already got one. So they'll go and they'll sort of rent a registered office address. You're only talking like 25, 30 quid a year. It's not a lot of money to have that address. And those places will often mail forward to you and things like that as add-ons you can potentially do. But what it does is it gives you that registered office address, and all that is really is by default that's the place where the company will hold its important documents in terms of who owns the company, what they call the registers, and we'll touch on that a little bit later. But generally that's the kind of place where that will be. So so you're going to choose that address, and the only thing I would say, and that needs to go on all of your important kind of official documents. So when you send an invoice out, you might have a small little footer at the bottom that says registered company name, number, registered office down there. You tend to want to put it in your emails, these kind of things, anything legal like that. But there's nothing stopping you having another address in big letters with your logo. So similar to your trading name. So if you imagine, let's say, using that plaster example again, you've got a unit and you'd rather kind of supply statements and people knew about that unit and sent stuff there, you might have your actual trading address up in there, your big logo with super duper plasterers, but right down the bottom you've got it's SJJS Plastering Limited registered office, your accountant's office or some other office that you've paid for. So that's possible, but yeah, do choose your registered office. And then of course think about if you're going to register through Google My Business or something like that, where that pin goes on the map on the internet of where you are. I would be cautious about doing that with a registered office address. A lot of time it will kind of clash with a lot of other businesses that are at that address, and it just looks a bit odd. So generally, if you're going to do that, I'd try to use some other sort of address other than your registered office, unless they're one and the same. If you actually have a registered office that is your office, then of course drop that pin on there and get that going. But do it's a small practical consideration, but do consider it. Then decision 3, arguably one of the most important ones, is who's going to own it? Who's going to be the shareholders? So in a small owner-managed business like we're talking about in the small business world, let's say you're a freelancer, or using the plaster example, you're going to want to own those shares as the owner. What you might do though, and this is from as tax geeks, this is something that's important to us, is there anybody else that you want to own that company with you? You might have a business partner, so you might want to go 50-50 and you own half the shares each. So you might form it with 100 shares and one of you owns 50, the other one owns 50. You might have husband and wife scenario and same deal. You want to split the income because that's tax efficient, or they're going to be working in the business, so actually it makes sense, and you can do things like that. You can also, without getting too complicated in this video, you can also do something called an alphabet setup where you have those shares named different things. That potentially means you can pay out different amounts to different shareholders. Because if you imagine if you paid £1,000 of profit out to those shareholders, because that's what the shares enable you to do, quite often you'll hear that term dividend, that's what they're talking about, payments of profits to the shareholders. If you paid £1,000 out and you owned it 50-50, you'd have to do 500 each. There is a way effectively to make sure that you can slant those around a little bit depending on people's needs and tax brackets. So more than we've got time for in this video, but that is a possibility. So yeah, deciding who is going to own it. Now, we'll talk about it in a minute in step 4, which is the directors, but they don't have to be the same. So you could have people who are just shareholders. So quite often you might have like a silent partner, like an investor who wants to own some of the company and get a return on their money, but they're not interested in the day-to-day running and don't want the responsibility, so don't want to be a director. So deciding who the shareholders are there is pretty important. It can be changed later, but it's worth bearing in mind that it's far easier at the beginning. The only practical consideration, we'll talk about that later, is if you're forming a bank account, sometimes having multiple directors and shareholders can add some complexity towards getting everyone in the room to sign the mandates, or just having to sign multiple bits of paper. So sometimes it can be easier to form it in one name and then add later, but it's much of a muchness because there is quite a bit of paperwork to suddenly add somebody later on as a shareholder, so, and potential tax consequences depending on what you're doing. So try and get it right from the start. So then the other decision we spoke about is who is going to run this thing, who's going to be responsible for the running of the limited company. And as a director, you do have legal responsibilities. Quite often when you form the company, you get a nice little snail mail letter in the post from Companies House telling you about these things, but you do have to act responsibly in the best interest of the company and all these other things. So it's a big deal. So, when you do that, make sure you're aware of that. And anybody else who is potentially wants to be a director understands that as well. The one thing that being a director does do is it does afford you some flexibility about the money that's coming out and how you get paid and things like this, which aren't available to non-directors. So generally, in the small business world, the people that own the company or have got that kind of real interest in it are generally going to be the shareholders and going to be the directors. But as I mentioned before, it doesn't have to be. As long as you're over 16, you can be that director, and just make sure that, everybody's comfortable with what they've got to do as a director. So then, having made those 4 decisions, then you're going to go on and form that limited company. Now, you can do that in a few different ways. You can do it direct with Companies House, very cheap, under 20 quid. You can have that done. It's there. It takes about 48 hours. The only thing is, when you do it with Companies House, what you don't get is you get like the standard, what they call like articles of association and things like that to say it exists. You get an incorporation certificate. You need that for the bankers we're going to talk about in a minute. That proves it exists. But you don't get the company registers that by law you need to keep, which are like who owns the company, who owns the shares. You might want share certificates. You might want other things like meeting minutes of you deciding to form the company and getting these directors and all these things, and then you don't get those. So generally what you tend to do, and this is what I would tend to advise to people, is to use a formation agent. So be that an accountant, be that an online firm, and just ask the question about the registers. Do you provide the registers? And that's the big key thing, because you do need those. So, and there's other videos on the channel talking to you about why those are important, but you need those. So bear that in mind. So generally the Companies House formation just doesn't do it. So you're gonna have to get those later. So using an agent at this point is probably a good idea. And it doesn't tend to change the time. You're still talking about 48 hours outside of coronavirus. So in 2020, when we recorded this video, you could actually same day of formation. Right now, as we're recording this, they've taken that away, and it does take about 48 hours, but it isn't a long process. So it can be with you quite quickly. So yeah, do that, use a formation agent, and also they can potentially give you some advice or stop you doing any pitfalls around what you might be doing. This Companies House will just let you enter whatever you want in the boxes, and you can potentially get that wrong. So that's the way of physically forming it. And formation agents charge a wide range of fees, but they're not drastically high. It just depends if you want advice, if you want registration for taxes. There's a lot of bolt-ons that you could potentially do. And registration for taxes is quite a key one, because generally, at the time you form the company, you're going to want to register for corporation tax. That's the company's tax. And by default, that often is done wrong, and you end up getting 2 tax returns when you could have just had 1 and things like this, and that adds cost and complexity to it. And you might also want to register for payroll for you as a director, or VAT. Now, do not do either of those 2 things without educating yourself first. That's another big caveat. And again, there's loads of videos on the channel you can watch to see if that's right for you, but you might also choose to do that or get some help doing that from day one as well. There is one other decision actually that you might have to make during this process when you're forming it, really, and that you'll be asked for an SIC code. It's like a list of kind of trades really, and things that roughly companies do. Unfortunately, in the modern day, we find that a lot of the time you won't find an exact code, so you might have to use some that there's a couple that are like other technical services not elsewhere classified or something like that, and you end up in that kind of bucket. But generally, you should just be able to search through the list provided and just find one that roughly sounds like what you do. You can change it later. It's important for reporting and the stats and a few other things, so getting it right is important, but ultimately I wouldn't stress too much about it. If you're in the right ballpark and you're comfortable with it, then that's fine. So but you will have to make that decision as well. So then let's talk, I did say we touch on the practicals, so let's talk about getting a bank account, because okay, you've got the company now, you get a certificate, you're live, you exist, congratulations, massive decision, day one for you, but of course you want to go and get paid. So getting a bank account. Now in 2021, that's quite difficult compared to what it was. The bricks and mortar, the onlines, so your Barclays, which is normally a great bank for small businesses, they're difficult at the moment to get a bank account. You can't walk into a branch. You need a phone there's a long wait. I mean, during actual 2020, they physically weren't actually opening bank accounts. It was an absolute nightmare to get a new business a bank account. They are now, but there are time, you could be waiting 6 odd weeks to get it. And obviously if you're trying to form this limited company and get trading and you want to sign up to, I don't know, Amazon, or you've got an eBay business and you want to be able to get paid into a bank, you're going to need bank details, so that can be a struggle. So where we've seen the majority of people going right now is Starling. Starling were equipped for their online bank, and they were equipped for online formations. So as a result, we've seen a lot of that. Small things you might be asked for during the bank opening process. Obviously, you're going to be asked for the details of the company, who owns it, directors and the like. You might be asked for what they call a TIN. It's a tax identification number. Actually, a lot of time in the UK, we don't call them that. We call them UTRs, unique tax references. You tend to get that about 10 days-ish after you form the company if you've registered it for corporation tax. So you might not have it immediately. It doesn't normally stop you from opening the bank account, but you might be asked for it or have to provide it later. You might also be asked for a letter from your accountant if you have one. With Starling particularly, we've seen this a lot, and that will need doing. So if you have an accountant, they can help you through that process. So bear that in mind. But generally, yeah, you can go online. But honestly, most of the banks are the same. Check that you're getting a real bank. So a lot of them are backed by the government. So if you lost up to £85,000 in there, it's all protected from the government. So do check they're a true bank, as it were, before doing that. But yeah, online we're seeing a lot of Starling right now. But ultimately, if you're comfy with a local bank and you're not time pressured, that option's there. And of course, there's nothing stopping you having multiple bank accounts. So if you needed a Starling one, for example, and other banks are available to get you going, then great. You could always, if you felt more comfy later, form one of the other ones or have that going on in the background. You've just got the practical problem later then of telling your clients or your customers, can you change your bank details to this one? So that's getting a bank. And then there's one other key thing that you're going to need to do, and that's just make sure you've got some way of invoice template. I mean, if you've got an eBay business or you're an e-commerce business, obviously you're going to sell through platforms or direct from your website. You're probably going to handle it all there. But if you are professional services or you're in the trade, you're going to want some way of charging your customers money. So getting yourself either an accounting bit of software, and whether that's right for you or not, there's other videos on the channel that'll do that. Shock horror as an accountant, I'm going to tell you, yes, I think they're a great idea for you, but do check that. But ultimately, it might just be that you create a Word document or an Excel template or something like that with a basic template. But do make sure that basic template has, as we mentioned earlier in the video, registered office, registered name, things like that, so you can practically start to get paid, and then you can issue that out to people with a description of what it was and everything else. If you're not VAT registered, it's a common question, then you don't need to mention VAT on it. So don't think you do. If you're not, if you haven't registered, there is no need to mention any of that on there, and in fact you shouldn't. So do bear that in mind. And then you got it. You got invoicing. You've got a bank account, you've got a company, you can get going, get rolling. And one final mention then for something, and that is, of course, do you need an accountant? Well, I think there's probably another video on that whole topic, but ultimately it's a little bit like a hairdresser. You could probably do it yourself, but is it a good idea? Who knows? I'll leave you at that one. I won't talk to you too much about it, but what I would say is generally it's unlikely that as a limited company you would not have an accountant, mainly because it's not like a tax return once a year that you just have to file. It is actually something where you have to produce some full accounts that have to be electronically tagged through software to go to the tax people as well, and that's generally the stumbling block, aside from the cool stuff they can do with the tax savings. So do bear that in mind. And of course, if you need to talk to people, guess where we are, just down here in the link below. That's it. If you've enjoyed this video, make sure to click subscribe, and we'll see you on the next one.